best investment. It has 140 locations across the country. They grow steadily by opening new locations, and they did an acquisition. Company is a good business model, a good market, growing. But most important is management. So,
Hello, my name is Anastasia Kuzmina, and today is the first episode of my podcast, Portraits in Finance. And today I'm speaking to a very special guest, my classmates, Coen Binnerts.
hi Anna, thank you for inviting me for this first podcast. It's very nice that I'm the first guest, and I hope that we will make it into a nice first episode, I would say.
Thanks a lot for coming, and I know that your career has been really nice up to this moment. So you worked in valuation at Kroll. So previously it was called Duff & Phelps, and now you're a successful manager at one of the oldest private equity firms in the Netherlands. It's called Antea Participaties. You're focused on small cap. So I just wanted to know a bit more about your career. You could
Thank you. So I started indeed after my university at Kroll, and Kroll is one of the largest American consultancy firms, at that time at least, specialized in valuation. Nowadays, they specialize in also business intelligence, cyber risk, etc. I did there 3 years, worked on a lot of cases. I think we'll talk about it later. And now I started as an investment associate at Antea, and last year I became an investment manager.
Now let's start with Kroll, your time there. So how did you start there? So how did you decide to go to valuation of your studies? I remember that you have been always technical. You really liked coding. You really liked Excel. So
to be honest, I started first in my first 5 years during my studies at a small private equity firm based on turnarounds. And
how it was called?
Plain Vanilla Investments. And I started there as sort of bookkeeper, helping them out with some stuff. And during the years I did my business economics studies, I became more involved in what they actually did, is doing deals. And I learned a lot of things like Excel and coding, etc. But then, after my studies, I decided, I want to do more for large cap businesses. So then I indeed joined Kroll. And what we did is I started with a large group, around 8 people. It's very nice because you're able to, immediately join, have fun. You are on the same path, kind of. And we did a lot of projects. And after 1 year, we went to Chicago to, have some training on how to, to do valuation from a US perspective.
Sounds a lot of fun.
Yeah, it was a lot of fun. The nice thing was that we knew each other already for 1 year, so we were more a friends group than the US counterparts were, because they just joined, and we were already 1 year in the firm. So we kind of knew our own group, and we had a lot of fun with the UK and the Germans and the Swedish people there. So that was very nice. But after 3 years, I decided I like investing more than consulting, because consulting is helping from projects to projects. And in private equity, what you do is you do M&A, right? You buy a company, but that's only the start of the journey. And that's a big difference, I think, to consulting or investment banking.
Sounds great. And if you could tell me a bit more about what kind of skills did you acquire while working at Kroll? So and also how the projects look like?
Yeah, so the biggest skill you get, I think, anyway, if you start with working, is that I got technical skills. So I learned Excel, how to actually do valuation in practice. So what you learn from the books is not always the case what you do in real life. And we did really great projects. So my first project was a glass fiber company we had to value for a takeover. It was very exciting because the first time you actually do valuation for something that's real, right? Instead of some theory in a book. And all the way to debt to equity swap for one of the largest shipbuilders in the Netherlands, which was actually also in the news and in court. So you kind of learn a lot. The technical skills is what you really learn in Kroll and in those kind of consultancy firms. Also making presentations, and that's very nice.
I think it's also really useful when you go afterwards to private equity or maybe to M&A. I think that it also really helps you to understand different types of things, right? Because I think at Kroll you also did not only valuations but also fairness opinions, right?
Yeah, we talked before, hence a little bit. So we did some fairness opinions, which is basically, if you don't know what it is a company wants to buy another company from stock market, and then the board of the directors and the management needs to know is that a fair price that they pay. So they get a fairness opinion from a party like Kroll to understand if that is indeed the true value, and they can show to their shareholders, yes, we actually get the real value. And it's also very much used in private equity. If you sell from fund to fund, then they often ask a fairness opinion because the buyers, those are often different LPs than the one that you were selling from. So they want to know, is it not an inside transaction just to get the carried interest that you do? So that's why they get a party like Kroll. It's very nice to learn a lot of technical skills on it.
And so in terms of projects, how would the typical project look like?
So there were two types of projects, I would say. One was accounting-related projects that were very recurring. So what we would do is goodwill impairment tests, purchase price allocations, and other. Yeah, it's a 50% of the job, but the other 50% of the job is pre-transaction deal-related.
I think that these types of projects you learn a lot.
Yeah, I mean, from both, you learn from the PPA and goodwill impairment test. You very much learn the technical skills, and the pre-transaction because the deal is so much more important. There you learn the more communicative skills, I would say, that you don't really learn in the impairment test or in the purchase price allocations as much, at least.
And how did you decide to move to private equity?
Yeah, so a part of that goodwill impairment test and accounting related was also for private equity firms. So we did private equity valuation. So if you don't know, a private equity firm quarterly has to report to their limited partners the value of the assets that they hold, and they verify those valuations. Sometimes, at least in the US, that's very common. In Europe, it's becoming more common through parties like Kroll, and that made me very excited because it was not about technicality, because I mean they barely made mistakes, but it was more about the story that those companies went through. So I remember one investment from KKR was PortAventura, which is a big amusement park next to Barcelona, and the guy that that worked on that deal and was a part of the deal team, he always end every summer with his kid to the newest transaction that not transaction but attraction that they just opened, especially the real roller coasters and those kind of things. And he was the most passionate about it, and that I understood. The passion in the work is that you constantly follow companies instead of working from project to project and maybe returning projects, but I like that very much in private equity. So I decided, investing is more up to me than consultancy is. So that's why I, joined Antea after 3 years.
And in terms of skills, so what kind of skills did you, let's say, were missing when you applied to Antea? Because you still got a job as investment associate, right? After 3 years, and then I can imagine legal skills you were missing because probably at your job at Kroll you had different types of projects, right? It's simply when you go to private equity, you still obtain some new skills.
Yeah, so there are two skills that you miss if you go to from valuation to private equity, is that you miss the selling skills, and because you try to buy companies, but it's not that you only get sold at. Someone wants to sell something to you, but mainly sell yourself. Hey, how we as a private equity firm can contribute to your business. So that's what you lack when you join a private equity firm from Valuation, and also indeed legal skills. But to be honest, the lawyers will help you out on that mostly, and you can learn the basics definitely within half a year. And especially if you work with more senior people, they already know what you want. So your contribution can be more in the beginning on the technical skills, and later on the legal. I mean, yeah, that's what you have to face, I think.
And let's say now in very simple words, could you explain what private equity is for especially students who are watching us now and only thinking about entering the industry and considering what potential internships they could do in the industry?
Yeah, so private equity, what we always tell in our pitches that we make is that you have a bag of money. That's basically a private equity fund, and you invested in 8 to 10 companies. So your work mainly consists of analyzing companies you want to buy and manage those companies throughout the years until you exit it, and that's also part of your business. So yeah, that in very shortly, that is what you do. You do everything in M&A, everything portfolio management, and again M&A at the exit. Yeah, that's simplistically what it is.
And also maybe you could, just explain a bit how it works when you start as associate, when you become a private equity manager, and also when you become maybe director or partner, what kind of responsibilities you have in the firm, and what actually you manage, which kind of processes.
So, I mean, I can only speak from my own experience, but
absolutely.
It's
but also maybe how you see different people on your team working on which kind of responsibilities during the deal.
Yeah, so an investment associate, I think they mainly focus on new acquisitions. So how you have to see it is that anyone that just joins has to build up their own portfolio, right, of companies that you want to manage later on. So you receive information memorandums, you make analysis, market research on them. You help out maybe portfolio companies with add-on acquisitions, searching the market, and you will work on, analyze the IMs, on LOEs, on the DD phase, which is sourced out to DD party, which you still have to get the report, analyze it, understand what is it the right company we're buying and what they thought before. You would work on the legal stuff and then the notary. So basically, from the first moment you receive an information memorandum to management meeting to the notary, where you finally, buy the company. And as an investment manager, I think you do the same, but you do more the portfolio management as well. So I think what I now do is more, I would say 40% is portfolio management, 60% is new acquisitions. And as a director, that becomes more and more to portfolio management, and then a managing partner will do everything related also to investors and presenting on shareholder meetings and on those kind of things, especially in the smaller funds. That's I think that's what you do is that your journey, I would say.
And how long does the typical investment process look like? Let's say, how long does it take to acquire the company, and how long do you keep the company in your portfolio once you acquire it?
Yeah, so the investment process, till the buy company is between 0 to 5 months. I think the quickest I've ever seen was the deal we sold ourselves 2 months, which it is possible, but it's very, very quick. I think when you receive the information memorandum, you have a couple of weeks later management meetings. Then you will have LOE, which also takes 1 month. Then you have around 8 weeks to get bank financing, DD, approval from investment committee, then legal documents till you till you get to the notary. I think the process from LOE to notary is 8 weeks, but before is really dependent on the selling company. How quickly do they want to do management meetings, etc., and how much pressure do they put on it.
And so, once you acquire the company, how long do you keep it?
We on average do 6 years. I think it's normal to do somewhere between 2 and 7 years, 7, 8 maybe. It depends on also how your fund is structured. So some funds are structured in such way that you have to sell after 10 years, maybe 2 years later you can, if there's a big crisis or something. But in general, you have an investment period of 3 years, 7 years that you have total holding period, with 2 years extra if you want, or if you have to.
And let's say private equity is buying the company. What typical maybe strategies do you use in order to improve the company?
I mean, it's very much dependent on what you buy,
Yeah,
right?
absolutely.
But
But in general terms, what kind of maybe strategies
I think
typically
there
private
are
equity use?
multiple strategies, very much focused on organic growth. So grow your number of locations, improve pricing, for example. Cost cutting can also be one. Or buy and build strategies where you do a lot of add-on acquisitions, and then at some point you integrate them. You build a shared service center, those kind of things. But yeah, it really depends on the kind of companies you buy. I think that what you see the most is a lot of private equity firms were very much focused on buy and build strategies before the interest went up very much. And I think now they need to be more focused on organic growth, because it's not cheap anymore to buy, the companies with a lot of debt. Yeah.
Absolutely. And maybe in terms of your strategy at Antea, so what kind of companies do you typically buy? What is the size? What is the industry?
Yeah, so we are a more generalistic company, a private equity firm. So we buy all kinds of businesses. The lesson 1 is diversify. So we buy from business services companies to industrials to food, everywhere. But we are focused on 3 things. They're focused on growth. So we want firms that have a good track record in growing. They have to be in the Netherlands. And the size should be between 1.5 and 5 million EBITDA, because our fund is limited to a certain amount, and we want 8 to 10 companies to buy. So yeah, eventually you have to focus on those companies. And we always, the fourth one, management must invest also alongside us. Otherwise, the model just doesn't work very well.
What's the contribution in terms of percent? Let's say you expect from the management.
Doesn't really matter.
But you just want to see that they invested in the business, right?
What we always tell is that you have to invest for yourself a large amount. So say someone has 300,000 euros, then we expect you to put between 100 and 150k. If you have 30 million and put 150k, it's too little. If you reinvestment, you have 90%, you go back to 10%, is also not giving a great signal, because you will cash 95% of the purchase price. So we always tell we want you as a management to put for yourself a significant amount. That works, I think.
And I think it's really important also when you acquire a company to be really confident about management, right?
We look at
what you're actually trying to find in the company, and you think that this company will grow.
Yeah, what you look at is in the company is a good business model, a good market, growing. But most important is management. So if the management is bad, but the company is great, and the management doesn't want to leave, then we're not acquire. Is the company mediocre, but excellent management, we still want to buy the company maybe, because you can make great returns, especially in this space, with a very good management compared to compared to bad management in an excellent company.
Do you sometimes help managements, let's say, with business models, with general strategy?
Yeah, more with. What I learned in Kroll very much is that key value drive. There are only a few key value drivers per company. So even Apple has only a couple, and focus on those 3, max 5 key value drivers. Look at it. Get to know them, report them, analyze them, and take action on them. That's, I think, what we can help very much with. Is we can't lead a company, consultancy firm or electrical installation company, because we don't know anything about it. But what we know is about how to track KPIs, how to keep financial discipline, how to structure businesses, how to finance them. And that's where you can very much contribute as a private equity firm.
And I can also imagine that now you're also spending some time with your investments.
Mm.
So how often do you take visits to them?
We at least talk once a month with them. Some we do a bit more often if they're, if they have add-on acquisitions, or they have to, do restructuring, or they're refinancing, or we're selling them. You spend more time on those. But in general, I think we at least talk to them once a month, once every 2 weeks. And we always also get management reports, which is very essential if you want to work in this sphere, because numbers is eventually what you very much understand.
Sounds great.
Mm-hmm.
And could you please tell me more about your best investment so far?
So I had 6 investments, and the best investment I think is Qualitaria, which is for British watchers a snack bar chain. We call it Cafetaria in the Netherlands. It has 140 locations across the country, and they grow steadily by opening new locations, and they did an acquisition. I mean, the EBITDA went well, the net debt went down greatly, so I mean it's going to plan anyway, and that's a very good company to own. I think it's also very stable with excellent management, because it's a franchise model, so you get a steady income, and in combination with the management sitting there, I mean, you have one of the best companies that we owned in a while.
And so how did you decide to buy this specific company? I can imagine also you getting a lot of proposals every single day.
Yeah, we get between 200 and 250 proposals per
That's
year. That's very much. But what you decide on is, I mean, with Qualitaria it's a bit funny story. So I went with my girlfriend to eat at one of their locations, and 2-3 months later we got a proposal. Hey, do you want to buy us? And we had a very good impression, at least from the first time I ate there, and I was thinking, hey, they do something good, right? They have good quality at a good price. And then we saw the company, and we thought, oh yeah, this is amazing. So we prepared to pitch. We did made a good bid, I would say, for good price, not too low, not too high, just the right spot on price, and we won. I think also partly because they liked us as people, as we don't come every day and change something that they don't want. I think the first thing we said, when we bought the company, don't change anything on the business model, because your business model is doing very well. Just focus on growing locations, and they're still doing this. So yeah, I think keep where you were in the past, and that often helps with those kind of transactions.
That's a really interesting story. Mm-hmm. I think sometimes it's indeed it's quite a small country, right? You also know some brands when you buy them, and I think it also makes the story a bit more personal.
Yeah, definitely. I mean, it's a known brand, and it's not it's not a McDonald's or KFC, but there are actually more locations of Qualitaria than KFC or
seriously,
or McDonald's. So yeah, that's very interesting.
That's interesting to know.
Good marketing for us as well.
Yeah, and I think it's also really focused on the Dutch market, right? Because you have these croquettes, patat.
Yeah, you have the typical Dutch snacks, I would say, but they also have burgers. They bought Burger Business, which is a burger chain, like Shake Shack, like this kind of chain in the US. And that they're growing this steadily also. I think we bought it with 4 locations and now have 10 or 12 locations. So they're growing that rapidly as well. Yeah, you can contribute to this. Although the management does the most of the work.
So now people watching us.
Yeah, good marketing for Qualitaria.
At some point you can sell it, isn't it? Mm-hmm. And how does your typical day in private equity look like? Because it seems you're getting a lot of proposals, but you also probably need to spend some time analyzing them, right? So making some models. So
yeah, so no day is the same in private equity. But a very typical day maybe it would be is that you come in the morning, you check your email, you got an investment memorandum or teaser from a corporate finance advice, you sign the NDA, you receive the IM, then you start reading them, analyzing them. You might throw away one or two in 5 minutes because they don't fit your investment criteria. But yeah, that would be start of a typical day that you receive it. Then you go on a deal that you're currently working on. You receive the SPA back from the lawyers. You check the SPA, is that okay? Then you also receive the same day the due diligence report from the deal you're working on. So you're reading the due diligence report, checking what is it right or not right. Then you have a break. Maybe a bit late, a bit before that you already had a break. Then you do watch a management report from a company you own. You talk to them for 1 hour about how it's going, how you're growing your business. And then maybe at the end of the day you're working on an exit that you were doing at that moment, discussing with the seller on the SPA price or the with the corporate finance advisor the bids that you received. So yeah, that's a very dynamic day, and you drive all the country. It's a very dynamic job, and that also what makes it very interesting, I would say, because those as no day is the same that keeps you working there for a long time. If every day is the same, it's boring, I would say.
And sometimes you also probably go to management to see the company, to talk to employees and to assess it, right?
Yeah, exactly. Yeah, sometimes with the companies you own, you talk to management. Hey, what can we change on pricing, or what can we change on the factory? They do a proposal on, hey, we want to buy this machine that makes our business more effective. Okay, fine. But how much does it cost? What you gonna do with it? What's gonna give extra revenue? That's the question you ask. So what we mainly do is we say yes, but what if we would choose different something, and if they give the okay answers to it, which are believable and they thought about it, then we always say yes. Yeah,
I think in general it's also more about having a support, right? Because private equity managers sitting in your company, you also get strategic support, you also get second opinion on some of your maybe strategies.
I think
it's also really helpful, I think, in growth. Because
what PE companies, if they do it well, there are more a kind of side managers. You can call them up, hey, what do you think about this, instead of being daily involved in the business. I mean, that is possible if you actually 5 days a week they're involved as kind of a CFO, but I don't believe very much in the go and sit there 1 day a week and check how they work, because you don't add that much value because you don't know the business. Yeah.
What do you think is the main challenge for you as a private equity manager?
The main challenge? The main challenge is buy good companies. And it's every day difficult. What I said before, right, is that you can have a great company but not as great management, and that psychological
element also takes some time for you to gain it, right?
Yeah,
as a junior, especially when you join the firm. I mean, especially if you join as associate, right? It also takes some years to obtain this skill.
You don't know. We once with a colleague went to a guy at at 8 in the evening. We had to drive around the site just to see their entrance, and then we came in. We had 3-hour talk with the guy sitting in front of a Godfather, screen, or what's called painting. It's like, what are you doing? Those are the very obvious signs, right? Because you have short conversations before you actually do a letter of intent, and in those short conversations, just by asking a few questions, you must understand how the person is. Are they narcissistic? Are they very, quick in their thinking? Do they know a lot about their business and can, if something bad happens, can they also act? That's very important to understand. Can you grow the company that you want? So if you want to buy and build strategy, a company of 10 million euro revenue is totally different than one of 80 million, because you much larger, much more structure you have to bring, and not everyone can do that.
I guess it's also about the right match, right? Because the company itself also has to make this choice to go to specific private equity sponsor, right? Because you also make a presentation, I believe, or like make a strategy proposal, what they're gonna see in their company, and they also need to make this choice.
Sponsors can be very different. They, can be daily involved. They cannot be daily involved. They can be very pushing on, I want this, and some are, we follow your path, and if your path is not correct according to us, we'll probably not acquire you. And we are on the last part. So if you have a very good, strategy, what you want to do, and for example, you want to grow X locations per year, you know exactly where you can do them, how you can do it, what you need for it. That is a good company, right? But if you, I don't know, you want to just be flat and do what you have, and if you have 10 employees, you don't really want to grow because it's difficult for you, then we will probably not acquire you, because even if you have 100 employees, if you don't have any ambition and reasonable ambition, then you're not for this kind of acquirer.
And maybe in terms of projects, so how does the typical deal team look like?
So you always do, because we're a really small team. So we have a partner and me or my colleague, and the managing partner, but that overlooks everything. So you work always in teams of two. The junior makes more the investment proposal and the bid, the Excel, give some comments on the SPA, and the manager always checks, or the partner checks, and the managing partner says, okay, this is good, or maybe we should do it a bit higher, maybe we should do it a bit lower. But in general, that's a good structure. You're very involved in it, but you always checked on. I think that works the best.
And also in terms of learnings, it helps you a lot in obtaining this knowledge, especially psychological, because you have to understand people, you have to understand the company strategies. So I think it also helps you in your own development.
Yeah, you need to be very, yourself needs to be able to do this. Because if you're not able to work on yourself, or work yourself and do the complete deal basically by yourself, then don't think this job is right for you. Then, because if someone has to hold your hand, it's not going to happen when you were 35 or 40 years old. It just doesn't work like this. You just need to be able to be independent.
Mm-hmm. And in terms of let's say profiles of people who are applying typically to private equity, because it's not your first experience working for a private equity firm, what are typically the people who are applying to private equity firms and who are becoming successful, in your opinion?
I mean, what's your profile? Standard? I don't think there's a standard profile.
Or who becomes, let's say, successful?
You have more in larger private equity firms. You have different specializations. So you have the investment team and the operations team. If you're the investment team, you often come from an investment bank or M&A boutique, or you're just a genius with industrial or some engineering background.
From Delft.
Yeah, from Delft. And the operations teams are more from consultants like McKinsey or BCG or Strategy, and you see that very often. I don't think that this is a job where you have to per se have to follow a certain career to do it. Although if you did marketing, I'm not so sure that this is the right job, unless you very much focus on finance, because eventually it's a numbers job.
But I guess it's also a combination of strategy and also finance, right? Because
you should not be only focused on the technical part, but you should commercial. You should like finance at least a bit, and you should understand strategy in the beginning, definitely. and you should be able to handle some stress, because it can be very stressful job sometimes.
And what do you think helped you actually to be where you are in terms of skills? So maybe you could also give advice to students. How could they go to private equity?
Yeah, so the biggest advice I would give: don't rush. If you rush, you're not gonna get this job, because it's a very long-term job, and you need the skills, the technical skills, to get this job. So if you work, I don't know, 2, 3, 4, 5 years in investment banking or consulting or M&A boutique, then try to make the move, but don't do it on the first year or the second year, because you're too young, even though you might not think you are too young. But
It's also about maturity, right?
it's very much about maturity, because you can't talk to people 50 years old and tell them what to do if you're 25 years old.
Absolutely.
It's not going to work out. I think that's the most important thing, and focus on the technical part, and try to be a bit more commercial. Talk to people, go on industry events, etc., and just talk to people. You get used to talking outside of your comfort zone, and that's a very important part of this job, is that you are comfortable with talking to people that are much older than you often, and you have to have the technical skills to quickly switch. What are they saying, and what does this mean for what you're buying. I think that's very important.
And I think also general news. You need to understand how the industry works, right? The general maybe key drivers of the different
read
industries.
A lot of financial news, I would say, or read the newspaper in general, the Dutch news, especially Financieel Dagblad or Financial Times in the UK, is very important to read, because you don't have to understand everything that it says. Just have to have general knowledge on, I don't know, there is energy transition in the Netherlands going on with all the grid infrastructures built. What does that mean for construction or engineering company in that space? You have to constantly keep up with the news, to be better in the business.
And in this quite challenging climates, what do you see? How do you see the industry, or do you see, for example, less deals going on?
Yeah, definitely. Yeah, 3 years ago, the industry was, way too good. For sellers at least, because we had 30 companies, proposals coming in per month, where 15 were great companies, and I think now we have 20 coming in, where 7 are good companies. So you have less proposals you will work on, and less good companies, which means more competition, because competition doesn't go away. Yeah. So the industry is going to have a hard time for the coming 2-3 years, depending on the interest rate, economic environment.
And let's say in terms of your competitors, who are typical competitors you see in the space? And let's say when you bid for the company, how many bidders do you see in your process?
Yeah, depends very much on the quality on the company, but you have two different, right? Financial acquirers and strategic. So financial in the Netherlands, I don't know how much are, 100 maybe.
In your size?
No, not in my size.
Because
maybe in my size 30, 40, but you have you have strategics and PE-backed strategics who want to acquire a lot of companies. So they are very much, come from the very large investors. They have the
lots of money.
assignment, to buy companies to grow your own business and get market share. Those are very competitors. I think the more Croft Capital maybe one, Newport is one, Holland Capital might be one. You always get around 10 bids, or the good companies get 5 to 10 bids per company, I would say. So, yeah.
What do you find the most exciting part of your job?
Most exciting part is, what I said is that you're very dynamic. So one day you buy a company, analyze everything what you do. The second time you do restructuring, or you do refinancing, or you sell a company. It's very different, and that's I think what makes it exciting. That no day can be the same, and there's always something to do.
And I think it's also quite rare that people actually maybe move out from the profession, right? Because typically when people go to private equity, they spend years in
but it's
the
also
profession,
because
right?
it's also
because of carry
there's a
compensation part.
kind of golden change on you is that you get relatively good salary, you get bonus, but you get indeed carry. For people that don't know what this shared, you share part of profit that you make. So the general model is 2% management fee, where your salary gets paid from on your car and housing, and 20% is the profit you make on a company. Can be based on deal by deal or on the fund, even with a hurdle rate sometimes. And you as an investment manager or a partner, you receive part of those money. And the larger the fund is, the larger, it can be millions.
Yeah, it also depends on the investment, because it can also go quite bad. And also the idea of private equity is that you also take more than one investment. I mean, in your case, it's like 8 to 10 investments, and then you get average return on them. Yeah. It's not like, I mean, one investment can do quite poorly, and the second one incredibly well. And then on average, you get some return on the funds. Yeah. And I think it also makes the model so maybe well-performing.
Yeah, you're aligned with your investors. So if your investor makes 10% or 15% return, you get a part of that. If they make 0% return, they should not. You, as a private equity manager, should not get any return. Right?
Absolutely.
Only your management fee.
It also should motivate you to make more return.
Yeah,
right?
That's why you're focused very much on the growth of those companies, because that makes your exit, and that eventually gives you the carried interest.
Yeah, I can imagine. But it's also just for people who are only joining. You don't get carry once you're like just joining the firm. It also takes some time, because you firstly have to acquire the companies. You have to build your portfolio, and then once you already spent a couple of years in the funds, you get it.
Yeah, so
it's not like
typical fund structure. I think would be is that you receive it after the investors paid back the money they put in. So that can be 8, 9 to 10 years. So you have to stay at least 8 to 12 years in a company to get any carried interest. And that's why it's called a golden chain, right? Because if you get a couple 100,000 or maybe a couple million, depending on the size of the firm, then you wait. Because you can't get it anywhere else, because everywhere else you would go in any other PE fund, you have to start over again, have to wait again 8 to 12 years.
But it's also not only about money, let's say it this way, because I guess, I mean, I'm not in PE myself, right? But I can also understand that for a lot of people, just this spirit, right? Because you actually can work on business opportunities, but you're not yourself in business. So you're kind of more covered in terms of risks, but you're also quite contributing to the team, because you're actually working a lot with management, with product developers, and you actually feel this business nature a lot.
I mean, you're semi-entrepreneur, I would say.
Absolutely.
That you have to help develop businesses without actually developing them, but you get eventually part of the profit.
That's really exciting.
That you make. So
you kind of advise
some sort of. I wouldn't tell it entrepreneurship, because that would be very disappointing for entrepreneurs to tell it as a private equity manager you are an entrepreneur, but of course you're not. But you're you're part of that team, and hopefully you contribute to the actual entrepreneurs.
I think that's, let's say, what is the typical age for a person to enter this industry? Because I think not so many juniors actually start immediately in private equity. But
no,
could you maybe comment on?
There's some juniors that do internships. I know there are some internship opportunities, but in general, I would say you have 5-year work experience, 4 to 5 years
before coming to
before you start. So that's what, 28, 29, 30, somewhere around this age. I joined when I was 26, I think.
That's really young.
Yeah, it's young. So, but I've also felt young in the beginning, I would say. I mean, you need, I think 3 years experience. What I had was the minimum.
And you also had your first internship in different investment firm, right? Plain vanilla. So I guess it also was helping you a lot, at least in bookkeeping, understanding general trends, understanding how the deal look like.
So what I learned there the most, I would say, is bookkeeping, which it sounds very silly. It's a very boring job.
It's really useful.
True, but it's very useful if you work in this industry, because you really understand how revenue is recorded simply by 1 second. And I think I see a lot of people having problems with bookkeeping, simplistic bookkeeping. What is revenue? Then it comes to accounts receivable. That's very important to learn.
And also step by step, right? So that you not like immediately probably go to a firm and then you have all you deal, because you also need to understand the deal from different types of products which you buy as a private equity.
I mean what you have to learn.
You also have to build communication with different advisors, parties, right?
Yeah, it takes a long time, but when you join an investment bank or whatever, just understand that you can learn super much for seniors, and suck it all in, and then you can maybe think about joining any investment firm.
And in terms of personal skills, what do you think is useful, for people to develop before they go to private equity?
What is it before? Focus on being technical, but that's you can learn after 1 or 2 years. You learn most of it. But then your commercial skills is very important. So you should not be scared, to talk to people, or go on an industry meeting and talk to some CEO or even accounting person or CFO. If you manage the selling skills in combination with your technical skills, you can get everywhere in this industry.
What do you think would be the typical exit opportunities from private equity?
There's no.
Come on, some people are becoming CEOs, CFOs, I guess.
Yeah, they become.
Also go to business.
What you see is, at least the best ones stay, I would say, because it's a golden chain that you're on, and if you do well, this is except for the financial compensation that you get, you also enjoy the work because you're a semi-entrepreneur, and nowadays the same, so you can do whatever you like, right?
Absolutely.
Yeah, that's great.
Thank you very much, Koen, for coming today. It was a pleasure talking to you, and thanks a lot for explaining a bit what private equity is.
Thank you. You're welcome.
Thank you for watching us, and we'll be coming back soon with new episodes, hopefully.